It might seem far away from us in terms of geographical location and even maybe near to us as a country, but it appears the immediate shocks are getting closer to the country than we have ever thought. I'm talking about the current developments in the Middle East in terms of the war. It appears that it could have far implications for the Ghanaian economy when it comes to prices at the pumps, trading, and even the larger economy as a whole. But what are those who are managing this economic space doing to ensure that at least we minimize the expected shocks? Maybe for those who've forgotten, the Russian-Ukraine war and what happened to the Ghanaian economy. Have we built the required shock absorbers to minimize the shocks that is expected? What about the lot of Ghanaians who trade in the Far East or import from the Asian region? How is this also affecting them? Are we getting the perspective from traders? Are we getting the perspective from an independent economist? I will also be getting the perspective from those who are managing this space. Someone from the Ministry of Finance to engage about what is being done, at least to minimize the shocks, because it appears that whether we like it or not, it would come and hit us. This is PM Express Business Edition, as I engage very indeed knowledgeable people in this space, the economy and all those things, to get their advice on and what we have to do. But before we get into a deeper discussion of this show, let me throw up this thing for you to have a better understanding about what is happening here. So you've seen the graph over there, that is the Israel-Iran conflict, and these are the geographical maps in over there. Again, you will see that this might be far away from us. So top 5 oil reserves countries, you've seen Venezuela, we've seen Saudi Arabia, we've seen Iran, and then we've seen Canada and Iraq as well. So the Israel-Iran conflict spreads across the Middle East. And if you've been following development, one of the biggest shipping airlines or lines is saying that, well, they're going to increase their freight cost. And you know what that means for us, those who import a lot. And you've seen that channel that also a lot of the shipping lines around the world often use to move vessels or move the product around. Iran purportedly blocks the Strait of Hormuz. About 20% of global supply passes through that area. And OPEC has agreed in principle to increase production by 206,000 barrels per day to deal with this problem. So the global prices, you know what we've seen. I think today we're doing somewhere around $83 a barrel. The projection is that it could hit $100 a barrel if we don't manage things well. Ghana's, and this is the bit about the benchmark that they've used in terms of oil revenue. Don't forget that we also export crude oil. It's not just about the imports as well. And global supply versus demand, we've seen the numbers over there in terms of in terms of how things go and how it's going to affect us. So let's look at fuel prices, and that is another area that, again, we should watch. All the projections suggest that from March 16, we could be seeing some serious spike in product prices at the pumps if this current trend should continue. But also the other side is that if the city remains strong, we could minimize the shocks. Let's come to our stocks. What we are, LMPA is telling us that diesel, we have up to 5.3 weeks of cover, petrol 6.8 weeks, and these are stocks that are owned by private firms and not Ghana as a state, our strategic reserves. So look at the potential impact of this. Increased crude prices, well, if we are exporting, good news, but if we are importing, bad news. Increased prices, rise in fuel prices in Ghana, increased transportational costs, food prices going up. Our colleagues or friends from Guta, those who are importing food and goods, inflation as well. There were projections that we could even hit 1% by May. This is going to change this thing? And what about its impact on policy rates and interest rates as well? So those are the numbers. This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition. As we look at developments in the Middle East and the impact on the Ghanaian economy, have we built the required shock absorbers, or indeed we are still exposed to the vulnerabilities as an economy some years ago? And again, we've not forgotten about the Russian-Ukraine war and the impact on the Ghanaian economy. There's an aspect about those who are trading from the Asian region, those who are important, and how is this development affecting them? We have the president of Guta in the studio here. Clement to join us in the studio for a discussion on that. We also have Dr. Tue Champon. He's a technical advisor to the Minister of Finance at the Ministry of Finance, and also senior lecturer at the University of Ghana, Accounts Department, and also executive director of CPS. And also, there's Du Sarkodie is also joining us via Zoom for this discussion. Let me zoom in straight to the technical advisor at the Ministry of Finance and to the Minister of Finance. Doc, for you, this is something that you pray that this shouldn't have happened, or listen, we have built the required shock, so it can be managed.
Yes, thank you, and a pleasure to be here. Actually, first time in the studio with my boss here, so it's good to see you. Look, like we were discussing earlier, the world we live in now really is one where shocks are the order of the day, right? What I mean by that is that gone are the times where every maybe 10 or so years you'd have a major geopolitical event. But what the last few years has taught us is that you should expect these things much more often than not, right? To the point that we're just coming off, in fact, we're still in Russia, Ukraine, right? Yeah. And then the initial period, the shock that sent to the whole world with the inflationary spike, and then the cost of living pressures, and then related governments having to make certain adjustments. But if you look at the situation that we're in now, where you expect these geopolitical events to be much more pronounced, and number two, the fact that the Ghanaian economy now is heavily integrated as part of the global ecosystem, for sure you would see some of these pass-through effects come. What then is interesting and important is, if you assume that geopolitical uncertainty is the order of the day, what do you do as a country to respond to that, right? So that, or what happens externally, you don't really have much control over it. What you have control over is what you do internally. So what you do internally becomes two or three things. What you do in terms of your fiscal performance, how you're managing the overall economy. So remember that when we entered the 17th IMF program, there was a statement that the fund issued, right, in the May 2023 report, that Ghana had underlying fiscal vulnerabilities. Yeah. That is why when Russia-Ukraine happened, we felt the impact much more than we should have. And at one point, you even had the reserves of the import cover was around 2 weeks or so of reserves. The situation is completely different now than we were in 2022-23. What I mean by that is that there has been more stability within the Ghanaian economy. And the biggest indicator of your ability to withstand some of these shocks really comes down to look at your trade balances, right? So you can look at the NDF fiscal numbers that has been published by the Ministry of Finance, and then also the Bank of Ghana, the summary of the economic and statistical data. Yeah. And if you look at those numbers and you actually compare where we were a few years ago to where we are now, your import cover is around 5.7 months, right? And that is still growing. And you also have a positive trade balance. So although we are exporting oil, we spend more importing. For every $1 that we get in oil exports, you have to spend a corresponding $2 importing oil into the economy. So the difference is 1. However, you're also getting more from the gold side, and then you're getting more even from your non-traditional, right, exports. So the net trade balance is around a positive 1 billion every month. And then if you look at the current account, it's around $750 million or so. So all of this translates into a much better, improved external position for Ghana and our ability to actually able to withstand the shocks relative to where you were a few years, right?
During the Russian-Ukraine war. So I get from you that now we have some shock absorbers now.
You built some buffers, call it, you have some savings in very simple terms.
To withstand these shocks.
To be able to help address these shocks if they are like the pass-throughs come. Of course, you have to do more. And this, we can go into the likes of the gold, the gun rep, and the other policies and the other more structural reforms that you need to do to help position the economy even better. But what I'm saying is that your first line of impact with these global events and these shocks would come, you feel it immediately from the external side and your trade balances, your current account, and we are in a much better position now from what we have in terms of reserves to be able to augment or support or withstand these shocks.
Doctor, then what do you tell those who would argue that there's already been concerns about what is happening and its impact on pump prices and the concern about its impact on cascading on inflation and even the cascading impact again on interest rates as well? If we have the shocks or if these things are known by everybody, it should send some comfort to everyone.
Of course, you have animal spirits, as we call it, right, within economics. If you take the oil pricing, that's just one dynamic. That doesn't represent the whole economy, but it's an important, right, metric. What drives the price at the pump is really sort of three things, right? The price of the product that you're bringing in, so you're buying it in dollars, and then you have to convert it and sell it in cedis. Number two, the taxes and the levies that you're putting on it. And then number three, the exchange rate. These are the three key things, right? So if the oil price went up, for argument's sake, and you have a stable exchange rate, and even the taxes are kept as they are, that's two factors out of three, right? The pass-through effect of that would be from the oil price channel or dimension because the price has gone up on the international market. But what I'm saying is that even if you had that oil price pass-through coming into the domestic economy, right, because you have a little bit more reserves now than you did, right, in earlier years, you are able to still keep your exchange rate moderately stable. So what would have been the worst would have been you have the oil price going up, you don't have the reserves as well to support it, and so you now are in a position where your exchange rate actually starts losing value against the other international currencies. So you have two of those factors now being passed on to consumers, and that would mean much, much higher prices at the pump than you would have if you had only one factor.
I mean, Doc, given the scenario of having the money at the bank, and what will you do even spending it right? I'll be coming back to you in drawing this scenario about you have a good reserves in the bank, you have enough reserves in the bank. Now, how do you spend them right in crisis? Let me bring in the Guta president as well. I know some of your members trade a lot in the Asian region as well, and I stand to be corrected. How has this affected those members who import from that area? And what would that mean in terms of the final price of the good that you sell to us if this thing doesn't end anytime soon?
Yeah, George, thank you very much for having me, and good evening to your cherished viewers and the Doc sitting right beside me, and then to
another Doc,
Dr. Sarkodie. Yes, when this issue started as president of Guta, I need to find out whether some of my people, are locked up over there, because every now and then, because of the nature of our business, we keep on traveling.
Yes, I know.
Yes. So definitely I had to, make some calls and then find out if some of our members are locked up there. Well, thankfully, nobody, as far as I'm concerned, is locked up in Dubai. But irrespective of that, we all know that we have some Ghanaians who are, locked up over there. But regarding members of GOTA, the report that I have as today, it shows that nobody of our association is locked up in Dubai. But irrespective of that, we have goods. Me, for instance, I have goods locked up in Dubai. Goods that were loaded into containers and then sent to harbor for shipment about 2 weeks ago. The ships are there, they can't sail because of the situation that we find ourselves. And I know it is not me alone.
Yeah.
Most of our members, have their goods locked up there because a lot of our members, do buy goods from Dubai and then from China. As for China, there's no problem there. Everything is...
Yeah, but in terms of the movement, doesn't it end up still passing through the Dubai area? Or because in terms of flights, we don't have direct flights, so
you don't have
it's just
flights.
the Qatar and then Emirates as well.
Yes,
but even shipments as well, there is some connection. If I'm not pushing too hard.
There is some connection. There is some connection in terms of shipment because if you look at the route of the ship that sails to the West Africa sub-region, which Ghana is inclusive, definitely it will affect us. So all we are praying is for this war to come to an end as soon as possible. Otherwise, it will create a problem in terms of a global commodity and then logistics. We shouldn't forget that when in the era of COVID, yes, there was a shortage of commodities globally because ships could not sail, flights could not, fly. And so therefore, there were shortages of goods. And Ghana, being no exception, we had our very good share of those issues. And then prices of freight had to, go up, as the doctor was saying.
MEX has announced, I don't know whether some of your members will use that shipping line, but they've announced an increase in their freight costs as well. They've
started announcing increase because if you look at the COVID time, at that time, a 40-footer container from the Far East, precisely China, we were paying around 3,000, 4,000, thereabout. But it went up as far as to 15, 16,000, 17,000, thereabout. So this is what, we are praying about, that this war shouldn't last so much. If it lasts, irrespective of the fact that we have...
Shock absorbers.
I'm telling you, you will definitely feel the shocks. So we have to pray very hard that within the shortest possible time, this war...
I know some of your members, and I hope I'm using the term right where they call it cut or something, that they have this very short term that they bring in these goods to meet supplies locally, pay the banks. It's a very, very short term stuff.
Yes.
How is this going to impact those members, the availability of those goods, and even the pricing as well?
It is going to have, a very negative impact because, those issues that you are talking about has to do with bringing, a cargo by flight. Yeah, because if you want to bring it by ship, it takes about, 2 to 3 months before you can get a ship. You can get your goods here. But if you want it, cut or the short as you are talking about, then you have to bring in by air cargo. And we have a situation that flights are no more. Yes, are no more flying. And assuming you've gone for a facility from the bank, to be doing, this type of business, it will definitely have a negative impact on you. So, like I said, it's our prayer that this...
Already there is pressure on your members to reduce prices.
Yes.
Could this change that trend?
Well, when it comes to pricing, it is not about the cost of the freight that goes into the cost build-up.
Final
Yes,
price
cost
of
build-up.
the
Yes, you know, we have exchange rate, we have duties, taxes that you have to pay, and then we can all attest to the fact that if you want to talk about the exchange rate, we have a very stable, you know, exchange rate. So I think we haven't reached that point
here where you look at
increasing prices. Let's wait and see how, you know, things unfold, and then we can say that.
But it could happen.
It could happen. That's why we can.
Let me bring in.
Is it like worst case scenario? Should we expect you and your group to maintain the current pricing?
Oh yes. Oh, for now.
So if it won't go up, let it be.
Let me bring in a senior economics lecturer at the University of Ghana, Accounts Department, Executive Director of CPS, Dr. Edu Osakode, sitting behind, and you've seen the numbers over the years, the numbers now. Does it also give you some comfort as an economist, or again, you are still worried because when it comes to the structural changes that we are looking forward to, it is work in progress?
Well, Josh, thank you. And let me say a special good evening to my colleagues in the studio. Next time I'll join you.
You have messed up not being here.
You and my good brother are enjoying themselves in the studio. Yeah, so as has been, a lot has been said by my colleagues. What I can add on is that we live in a global village, and therefore no country is immune to external developments. And that is why we always say that we should not politicize some of these events, as some people were seeking to do. The degree of your exposure or the impact on your economy will depend on the degree of your exposure. And I can give examples of how the Ghana would trade with certain countries. When the war between Russia and Ukraine broke out, there were certain commodities, apart from the normal oil price hikes and the rest, there were certain commodities that we used to also import from Russia, which were also disturbed. But straight to your question about is there a comfort or we should be worried, I think the dynamics are different as espoused by my colleague. In the year 2022, you know, the war between Russia and Ukraine broke out somewhere the first quarter of 2022. So if you look at the end of year 2021 figures, debt to GDP ratio of about 78%, economic growth of 5.1%, exchange rate depreciation of about 12.6%, inflation around that time, you know, was not the best. So the dynamics are different. A current account was in the negatives, but today we have some comfort. The stability is there. External position is positive. Positive primary balance, positive current account, positive trade balance. Thanks to gold production and gold prices, our trade balance is widening. We have built more reserves today. Our city is depreciating about less than 2% in the first quarter of this year. So far, inflation rate is 3.3% as we speak. Our reserves over 5%. So the dynamics are different. Also remember that in the Russia-Ukraine war, we had just, we're still recovering from the negative impact of COVID-19 on our economy and on our health. So then we have not finished the recovery before the war broke out. And another thing that I want to stress is that, the war in the Middle East is somehow expected. But the war in Europe is not what's already stated that Ghana also we export crude oil. So when international crude oil price increases, Ghana stands a chance. If we keep the quantity the same, then we stand a chance of getting more revenue than projected. So we could use that difference, the windfall, to cushion maybe the very vulnerable people in the society, more like maybe provide coupons to truck drivers and to taxi drivers, Uber drivers, so as we are keeping them, we are cushioning them from a possible negative impact of this. We are also hoping that the war does not travel that far. So far, so good. Not good in terms of war, but so far we haven't felt the impact yet. So we're just praying that it doesn't travel, because if it travels into months and years, as the Russia-Ukraine one has been, then we need to really strengthen our economy, not just the stability, but go deep down to the real economy in terms of production, agricultural production, in terms of industrial production and the services. It will interest you to know that even when the war broke up in Russia and Ukraine, fertilizer was difficult to find and price was rising. Even wheat, the wheat flour, which we use to bake bread. I remember you interviewed some of the bakers in the country, and the question was, why don't you use local wheat flour to bake the bread? And the answer was that Ghanaians had developed taste for the wheat from Ukraine, and that when they used the local wheat, the customers did not demand that much. So I think this is time to revisit the conversations of looking within and looking at the very things that we can really produce. Fertilizer, what does it take to produce a fertilizer? Why should we depend on Ukraine that is fighting war for fertilizer and other countries? So we should really look at some of the things that we can easily. I know our economy is still in transition, our economy is still young, but there are small items like poultry, like sugar, like these small things that we can at least try and produce them in the country.
But Doc, just a quick one, Doc. I mean, there were some who were saying that we were on a certain path in terms of the recovery. I mean, some were even saying the inflation could have even gone down to as low as 1%. We were expecting Bank of Ghana to cut the policy rate further. Ghana reference rate had hit 11.7%. We could even see a single-digit interest rate. Is this thing going to derail that?
Yeah, I mean, if it
because MPC is going to meet the other weeks, they want to be cautious about this. Some are worried that even though we've built the buffers, you don't want to start depleting your buffers now. Rather take actions that would stabilize things than to be taken by surprise. And that's the fear about some people as well, that the path that we were on to single digits even interest rates could be put on brakes.
Yeah, that's correct. Because when you read the MPC presser, their releases, and the Bank of Ghana releases on the economy, some of the things that they cite are these geopolitical tensions, the external shocks that we are talking about now. So it's a key factor to the determining certain variables in the economy. The issue of inflation, policy rate. If inflation is high, obviously they will raise the policy rate to help mitigate the situation. So yes, there's a potential that these developments will derail the objectives of having better rate of inflation, better rate of the policy, and better reserves, and an interest rate, lending rate. My brother, who is a businessman in the studio, obviously would expect or would want a single-digit interest rate. But like I said, the war is not extended yet. It's just started, and we are just hoping that it ends soon. And now, even there with the inflation, I have a different view about this 3%, 2% inflation. It is not for nothing that the central bank, pegs their medium-term inflation target at 8 plus minus 2. I don't know if they have revised it, but
no, they haven't.
In the minds of the central bank, some amount of inflation is good for the economy, because you expect expansionary fiscal and expansionary monetary policies. So that when you do expansionary, it will somehow impact on an increment in inflation rate. So some allowable inflation rate is good, 6 to 10% is okay based on the projections of the central bank. So we should not be too obsessed with 2% inflation, 1% inflation. Zero inflation is not good. I mean, every economist will tell you zero inflation is not good. Some amount of inflation can be allowed in the system. So I want to suggest that our quest for this 2%, 3% of inflation should not come at a cost, a higher cost to us. And some of the costs could be sterilization, could be government cutting down expenditure on very important goods and services all because we want to fight inflation or want to keep inflation at a certain level. So that's my view of the inflation. Allow the expansion fiscal monetary.
Doc, I'll come back to you on the structural issue, but Doc, to your point, I mean, you are an advisor to the Minister of Finance. Are you telling him that Odada or we have to move with some precautionary policy measures now before we are taken out of gear?
Of course, you have to be, to borrow my
Or you are telling him that Odada.
Okay.
Because of what is happening. We have the Russian-Ukraine war at the back of our mind.
Every serious finance minister, serious economy, you are scanning constantly for signals.
He's depending on your advice, so that's what I'm just saying.
No. So two things. You're scanning for signals, what is changing externally, and then how do you react to that signal? That is the advice bit, right? So we are not oblivious. We are not saying that, oh, we should sleep and that everything is all well and good. Of course not. There are big things that need to be done. There's a big recovery agenda. There's big spending that has to be done on the capex front. There's a lot of reforms that are being done to some of our state-owned enterprises. And there's also reform being done to ensure that at the end of the day, people like our good friend, the businessman, can get access to relatively cheaper credit. And, you know, he makes a very important point about the inflation target and all of that, right? The 3% that we have seen so far, in relative historical terms, we have not seen this for like the last 20 or 30 years, right?
As far
if you look at most of the central bank's targets, since we started the inflation targeting regime going back 2007 and all that, it's always been around that 10% band. Sometimes it even goes, right, much higher. For the last 10 years, it's been between the 8 to 10%, but sometimes we overshoot it. And it's only in recent times that you've seen that course correction to the point that you are below the band, right? So let's go back then. If you even had a shock of an extreme nature that prices went up and then we start feeling it here locally and all of that, should you expect your inflation then to move back up towards the target that you had, the 8 to 10% band, which is very much consistent with the policy target that the central bank, right, had set in that instance? The response then becomes on the interest rate side or the interest rate channel, right? You may not get your interest rates coming down as much as you expect that to be.
Single digit.
Right? It may take some time for that to happen. That is a natural consequence. So when the monetary policy people meet and they will do their own independent assessment. So you look at the MPC reports, these days, luckily they publish the views of the members. It's published, it's online, you can see. But in all of the reports, the first few paragraphs, they talk about what is happening globally.
The external.
And then they now translate to the local, and then they say, based on these factors, we vote for cutting the rate, or we vote for keeping the rate, or even hiking up the rate, right? Those are the decisions that the central bank MPC will be doing in the next sort of 2 weeks. So that I think is an important point to make. Ultimately, what you want is for rates to come down. And you also don't want zero or even negative inflation, deflation.
It's not good for industry.
Right?
Yeah.
What you've seen in Japan and all of those places, you need some moderate level of inflation within the economy. And for an emerging economy like ours, 6 to about 10% normally is what you sort of would want. It could come down a little bit, you know. So your question you asked me, we are being very proactive.
So what are some of the things that you're doing now to try and minimize the expected shocks? NPA is worried about the impact on pump prices. That could be the immediate impact.
That
our senior brother here from Guta is worried about the supply chain issues as well. What are some of the policy proposals or what is being done, not in those fine detail because these are still things in the cupboard, to try and minimize the expected shocks?
Okay. So you can think of it two ways. Sort of short term, what you do, and then the more medium to long term, what you do. Let's start with the more medium to long term, and I'll come to the short term. So more medium to long term really is about building resilience. And this is where the gold policy, GANREP, becomes really quite critical. So you look at the data, the correlation, and you can even do causation between gold, right, reserves, and then inflation, and then other macroeconomic indices, right, and even oil. And then you see that most times when you're in a crisis moment like this, people would resort to gold as a safe haven sort of asset. And I said on your channel here a few days ago that really we have like a 2 to 3 year window of opportunity on the gold side to try and maximize the windfall, because the prices would still mean correct at some point, right, in the future. That's one point. Then also in the more medium to long term, what you do on the energy security side. So for example, because we import some oil for electricity generation, you're now substituting that with a lot of your domestic gas resources. And that would lower the average tariff for ordinary consumers. So you have a lot more gas now coming from the likes of tallow and then from ENI, and that would allow you to then pass some of those savings onto the businessman, right, and the consumer in that sense. Number 3, medium to long term, what you're doing really, the likes of Tor, which you mentioned. So for a long time, since 2018, Tor had not refined a single barrel of crude oil. As we speak currently, it's doing around 28,000 barrels per day, and that can be ramped up when they finish some of the additional repairs that they're doing. Because the crude, you can source it from Nigeria next door. You can even use our domestic crude and refine, and that all saves on some of the cost items, right? In the more short term, some of the things that you do. So remember, part of the Petroleum Revenue Management Law, you've got the stabilization fund. And precisely the point that when you have some of these adverse shocks in the short term, you can tap into the stabilization fund and use that to support your budgetary needs, right? The other thing that you're now also doing in the short term is you're looking at all your budget line items, right? And then you ask yourself, okay, the things that you have committed to spending, are there certain elements within the budget item that perhaps maybe you can make some adjustments to? And these are all thoughts, right, processes and work. As I speak currently, we are working on various scenarios, how those scenarios play out, and then what the short and medium to long-term policy response ought to be. So we are not sleeping at all.
So now I can say that
for the ordinary citizen, yes, you can be rest assured that the government is actively working and proactively thinking through what these shocks would mean for the economy, and importantly, what the response ought to be to it.
There are some proposals that people are saying that if you look at the tax build-up on petroleum, and that is your playground, there are some who are saying that to demonstrate government's commitment and I care for you, maybe waiving some taxes on the petroleum build-up. Some are saying the NPA is doing certain things about even, for instance, asking that stop discounts, and all those things could push prices higher. In terms of recommendations, can we look at reviewing some levies on the price build-up to try and bring the prices down a little bit?
So these are recommendations that have come through, some of it sitting on the desk of my minister, and I can tell you that those things are being looked at very carefully, and whatever decisions are taken will be clearly communicated to Ghanaians in terms of the government demonstrating that it's actually with the people, right? But again, this conflict is only 4 days, right? It's still relatively early days yet. You still have to monitor the situation and then see at what point you have to call it intervene. Because as we speak currently, you have the automatic, the fully deregulated market working. You also have your exchange rate relatively stable, right? Yes, I get the point that, okay, what if prices go up? Could the government maybe make an adjustment on the tax side? So I talked about 3 factors: the price, the exchange rate, and then the taxes. So could the government make an adjustment on the tax side? It is possible, but those are being considered relative to how the situation actually plays out and the severity of the impact of the situation. I don't think we are there yet. It's still relatively early days.
In terms of the briefs that you often do in your management meeting as well, do we get a situation that when it comes to supply of fuel for the generating companies,
Yes,
things are also safe for us as we speak right now? Because I thought they
so
bring in...
MPA has communicated that they have the normal supply levels that they need and be able to bring the product. If you look at where we bring our products, they're mostly coming from Europe, Rotterdam,
yeah,
and then a few other places. And most of these ones typically would have stocks that are already available that you can actually get access to. The issue now is that if the pricing is dynamic, like you're saying, then of course you're going to buy it a little bit higher than you would have bought it during the last but one pricing window. That's just how the markets work. But in terms of access to the product itself, you've got product around that you can get access to.
Guta, is it too, again, early days yet about what you want government to do for you? Because I know that in some of these things, you would want to look at those who are managing the economic space to do something for you. Is there anything that you're looking for to see what government can do right now to ensure that those supply chains, these imports, are not affected, and maybe the alternative locally and all the rest? You've sunk in your money into these imports, they are not coming, it has implications on you servicing your debt and all those things. For your members and for those who are operating in that space, what do you want government to do for you?
Well, I think, Doc has outlined some measures that they, have put in place, to check or to arrest the situation if the situation, deteriorates. I would say it's early days yet. We have about 4 or 5 days into, this war. So I would say it's too early, to, come in with a proposal or tell government that this is the way you have to, go, or this is the way you have to do it, to cushion the business community. Let's all wait and see how the situation unfolds. If we get to a critical point, I know that government will try as much as possible to put measures, in place to check whatever situation that we will find ourselves. Because
maybe before you even finish, you remember during the pandemic, most governments initially was the health response. So you close borders and all of that. The COVID alleviation program and the interventions they provided came in a little bit later, right, down the line. That was during the pandemic.
Yes.
And then again with Russia, Ukraine, initially for the first couple of weeks, most governments were trying to assess the situation. And then it was later when we realized that, you're bringing sunflower oil from Ukraine, you're bringing wheat from Ukraine. That is where things started clicking, like, no, you have to do something about it.
But also, let's look at the currency situation as well. Are you getting the supplies you want in terms of the dollar cash to do the imports? Or even though we've seen there have been instances where your members were complaining that they were struggling to get the dollar cash. What is the situation right now in terms of the supply of the dollar cash? And is this stability impacting on your operations as well? Well,
that was, I think, about 3, 4 months ago that we had that situation. You will send your documents, everything, to the banks to make transfer to your suppliers for you, but they'll tell you they don't have
the day is not there.
The day is not there. But I think for now the situation has improved. We don't have those problems anymore. If you are able to send your documents, everything is okay. The transfer will be as soon as possible be effected for you. So currently we don't have those situations anymore.
I know, and I want to bring in the interest rate argument as well, because we've seen the Ghana reference rate come down. There are some who are looking forward to a single-digit interest rate. I see Doc smiling. Maybe as an economist, you think that you don't rush with these things. Is it a concern for you that,
yes, it's
Bank of Ghana, MPC, we have built the buffers, do not use this Middle East crisis as an excuse not to cut the rate further so you can enjoy the single-digit?
Yes, it's a concern. It's a concern. We had raised some time past, because in the past, irrespective of the fact that policy rate keeps going down, the commercial banks do not respond to it by
because of risk.
What risk?
Your members are
they are not
servicing their loans.
No, in this era that
you've seen banks write off. You're not paying your loans.
George, in this era that we have Ghana card, and then each and every one, can be traced to where he or she is residing.
The non-performing loans are still high, even though you say government has not serviced.
Let me tell you, those non-performing loans do not come from the trading public.
Yeah.
It is the big, institutions that borrow and they don't pay. But we go in for small facility, and then we are being chased here and there. I can tell you, those days are gone. But currently, we all know that the reference rate has come down
11.7.
Yes, 11.7. And I was talking to one friend who works at one of the commercial banks. So I asked him, now that the GRR has come to 11.7, what are you people doing? What is your margins? He was telling me, their margins is between 7 and 8%. And I told him, it is too high. If your margin is between 7 and 8%, then it means you are going to lend to the public at about 19% or 18%. Whereas in Cote d'Ivoire here, lending rate is 6%. If you go to Senegal, lending rate is 8%. But within the West Africa sub-region, if you take Nigeria, which is the biggest economy, Ghana is the second largest economy. So if Cote d'Ivoire, that Ghana has huge economy, than is borrowing or is lending at 6%, and Senegal is lending at 8%, what prevents Ghana, or what prevents you, the banks, from lending at a cheaper rate? But you see, I take consolation from some speech made by the governor, I think about a month or 1.5 months.
That during his tenure, he looks forward to a
single digit before he exits. And if you look at the tangent that we are going,
looks like we might achieve that before end of year.
Yes. It is possible. It is possible that we will.
If it's not for this Middle East conflict,
we should get George to get you to sit on the MPC
as an external member. Yeah,
we have been allowed to sit in there
and you've seen what goes in there.
Status. Oh yes.
But you think that as they go into this meeting, they should look at cutting the rate to see us get there when it comes to cost of credit going down?
Well, if they can do that, it will be in the interest of the business, community. But because of maybe the situation that we find ourselves currently, they might want to.
But Dr. Teok, help us. We have the absorbers now, so there is no cause for alarm. He told us that he's telling the minister that, so we shouldn't be back of Ghana. The MPC member. I'm just saying, I'm saying that so the MPC members shouldn't cite this as an example or a concern not to drop the rate. Because I also get them. The argument is that you don't want to cut and come back to correct.
Yeah.
It's good rather to be a little bit more careful, which is better that way than to take a huge shock and you have to come back to clear.
You have to come back.
So that is their concern.
And correct it. So what I would say is, even if they wouldn't reduce it, let it remain as it is, and let's observe, or let's see how situation unfolds as far as this war is concerned, before maybe in their next sitting they will consider reducing.
I know in the past you've also, and since you are here we'll talk about it, in the past you've complained about the taxes issues even at the port as well.
Yes.
Has things improved now, or it is still
in the run-up to the election, we had opportunity to meet His Excellency, the President. And in that meeting, we showed him a bill of entry. A bill of entry is basically a paper where the number of levies and taxes that you have to pay at the port is printed on it. And it was about 22 different levies and taxes that we are content with, have to pay before you can get your goods out. And when we show it to His Excellency, in fact, he exclaimed and he said, hey, this is what you are content with. He said yes, and he promised that when he come, he will try as much as possible. You know, he used a word that he will rationalize the duty. Taxes. Rationalize the duties, levies, and taxes that we are paying. So when they assumed office, we were expecting it at least in their first budget, but we didn't see that. But we can, in fact, attest to the fact that because of the stability of the currency, and because they use the currency, the FX in working out the duties at the port before it's being converted into cedis for us to pay, there is some, reduction of the duties and levies we have to pay. That one, we must make it clear for everybody to know. There has been some reduction as far as duties and levies that we are paying at the port are concerned. But irrespective of that, we are still calling for a total rationalization of the whole duty regime.
I'll come back to you, Doc, about revenue situation and whether things has improved and whether indeed it was premature to rush and do these tax reviews and what that will mean for our mid-year budget review. So maybe you may end up bringing some back because the revenue situation has not improved. Let me bring in Dr. Sarko. Doc, I mean, for you, going forward for you, what is your advice to government? I mean, with all these buffers, should we start using them or we should still wait a little bit and see how things will play before they move into gear 7 or 6?
Well, so thank God that we are in the early stages of the war. Hopefully it will end soon. We should not forget that we still have an IMF program, said that there are certain targets that we need to meet. So whether war or not, we should try and meet those targets. Fiscal consolidation is ongoing. Stability is ongoing. The external sector looks good. So the government should continue with their efforts to maintain the stability. In the discussion of all these things, the short-term solution that my colleague has espoused, the reserves, gold comes to mind at the center of all discussions. I believe that it is not for anything, also for nothing that God blessed this country with so much gold, that you use what you have to get what you want. We should leverage the natural resource that we have, particularly gold. Today, Ghana produces more gold than any country in Africa, and in terms of the world ranking, I think we have sixth position with Mexico, Uzbekistan, and Kazakhstan. And whatever we have to do, we have to leverage the gold that we have in abundance to really get more reserves and stabilize the currency. And let me give you these few figures. The unconfirmed report is that we produced about 5.1 million ounces of gold last year. Even if we assume that we are going to produce the same amount of gold this year and multiply by the prevailing international price of gold of 5,100, we're talking about close to 260 billion Ghana cedis. This is almost the same amount as the government's projected total revenue and grants of 68 billion. So the value of gold alone is almost equal to the total revenue and grants that the government expects to raise in the country. That is why most of it are not. We stress on leveraging the natural resource we have to develop our country. Let's do our best. I like the new reforms that the government is doing about the domestic gold purchase program, which was started by the previous administration. So thanks to the originators of this domestic gold purchase program, and now the reforms that have been added, I think that we have to move forward with these things and then get more reserves. It will also help correct the external sector, the current account, and then the total balance of payments. So these are things that I think we should commend the government and we should keep doing this. There are recent talks about the royalties. I am of the view that the royalties are too low. Did you know that the royalties from the non-oil minerals is almost the same as what COVID-19 was giving us?
But Doc, our development, there was a story by Reuters today that the development partners, they are pushing back on that, the sliding scale.
Yeah, I mean, we have to be strategic. I mean, every country is selfish. We should we should be strategic and negotiate better terms for our minerals. That's the position I've taken. We should be strategic. And of course, the windfall that we will have, the possible windfall we will have for any possible increment in international crude oil price, we should use that. My colleague was talking about reducing taxes. So if you have a windfall, you could use that to reduce the taxes on the export price, just to keep the price the same. And you can also use the coupons, as I indicated, to cushion taxi drivers and truck drivers, because the tomato seller, the moment they pay higher price of truck and taxi, the charcoal seller, the tomato seller, the onion seller will all come to the market and increase their prices. And it's something we don't want. I've stressed on the structure of the economy is something on the table that we should keep. We've talked about the Tamar oil refinery, having our own refinery, so we could, cushion ourselves a bit more from any possible external shocks again. I want to stress on the rent-seeking behavior. I don't want to talk so much about that, but it's important in our discussions. We don't want to see the situation where somebody or a group of businessmen and women will just take advantage of these developments and will just increase their prices anyhow, with the aim of seeking abnormal profits. I mean, this should be discouraged.
I'll come to that. There's a Guta president in the studio here, so I'll come to him on that.
Guta president is listening to us. As for Guta, they are fine. But there are also other businessmen and women. You go to Makola, and so we know. I know that Ghana is practicing
free market
we are not practicing the price control, but there are certain things that we could do. You can even use moral suasion. The agri minister or whoever is responsible can meet with the market. They have market queens, market kings, etc., so that they can control their members. And
it'll be a good time to go for a short commercial break. We'll be right back. This is PMX. When I come back, I'll get to Dr. Tue Champon to look at the situation about the revenue situation and going forward, what is the way to go. This is PM Express Business Edition. Welcome back to PM Express Business Edition as you look at the impact of the current developments in the Middle East and on the Ghanaian economy. Time looks like it's not our best. We'll be drawing the curtain down very soon. But I want Dr. Tue Champon to have the final word. So, Doc, Edo Susako, just in a minute, wrapping up for you, the way forward and also the concerns about fiscal discipline in all these things. I can give you about a minute or 2 minutes, please.
Yes. We should remember that we still have the IMF program and we have to meet certain targets. So we should sustain the fiscal discipline that we have and also improve on our rates, also taking advantage of our good and try to also push in the poor and the vulnerable, keep an eye on them, the safety nets, and try to also look within and industrialize so that we can cushion ourselves from any possible or any additional geopolitical tension or external shocks from that. So we are only praying that the war ends very soon, does not prolong. I also stress on the rent seeking that people should not take advantage of these developments and amass wealth or charge higher prices when there's no need for that. I believe that the government is in a position to be proactive. MPA boss, my good friend Ndoji Tamaklo, they are in a position to really do whatever they have to do to make sure that we have oil in the country. We don't want to queue. We don't want that situation at all where we have to queue for oil. We haven't gotten there yet, and I'm sure the government will be proactive so that we can cushion ourselves very well. Thank you.
Guta, Mr. Clement, I mean, from what the Dr. Tue Champon has said, does it give you some comfort? Or, typically you still want to sleep with your one eye open?
Oh, it gives me some comfort, because if you listen to him, the measures that the government have, put in place, to check for, even if this war is going to continue for some time, there is hope. We shouldn't, fear. Government is there to put up measures, to check whatever situation that we find ourselves. And I also want to take this opportunity to assure the Ghanaian public that nobody should be worried that prices are going to be increased.
That is an assurance.
That is an assurance.
You have a word from Guta members that we hear that because of
we are not going
Iran war, prices are going up.
No. We are not going to increase any price. We haven't reached there yet. And it is everybody's prayer that this war should quickly come to an end so that we will get our normal, supply chain, we will get our normal logistics for business, to come back to normal. But for now, there is no any increment of prices. That one, Ghanaian public must be assured for that.
I mean, Doc, I was talking about revenue. I mean, what's the situation now? Because the fear was that the last 11 months of the year, there was some gap in there. And again, fast forward, whether it was right on government's part to scrap some levies and taxes because of a possible hole again, and you may have to come back mid-year budget review.
Increase.
We knew about nuisance taxes and what happened the previous year.
Yeah. So luckily we did the mid-year budget, right? That was last year, and then the main budget.
Yeah.
Scrapped a number of tax handles, COVID levy, right? E-levy, a couple of other ones all went. And yes, those concerns were expressed, but I can tell you now that actually with 1 year's worth of data having come in, if you look at the revenue handles, and again, this data is public, so anybody who's listening to us, you can go on the Ministry of Finance website and check the Fiscal Outturn report for 2025. And what is very interesting is that when you look at the revenue handles, and one of the core indicators, which is really your non-tax, right, revenue, and then also your tax revenue. So our non-tax revenues are actually up 105%. So 5 percentage points above what was set in the target for the fiscal year 2025. If you look at your other revenues went up 8%, so 108%. Tax revenue was 97%, so we underperformed a little on tax revenue. And then grants, which is what the development partners and the likes bring in, that one, we got 68%. But grants is always a small line item in the budget. So when you look at that in total from the fiscal outturn, total revenue and grants actually was 98%. So just 2 percentage points shy of the target that we had for the year. And given those concerns that people had raised and were not going to perform on the revenue, to actually have ended the year close to the target, I think that is something that is a strong positive. And what is even also for me more interesting is, the corresponding adjustment that you make on the expenditure side of the equation. So I have argued, even before coming into government, that we don't have a revenue problem per se. We also have an expenditure problem that we need to deal with, especially the quality of expenditure and then the leakages, the value for money issues. Now, we have the Office for Value for Money that is going to be set up. You have an independent fiscal council to keep a check on spending. And if you look at the expenditure line items, overall, expenditure was 87% compared to the 100% right target. And if you break that down, government met its employee compensation was 104, so we paid 4 percentage points more. Grants to other government units, so your district assemblies common fund, right, NHIA, all those were able to get as much as 106%, so 6% more than what had been allocated to them. For the first time, the district assemblies common fund, the government has remained relatively current on them. What I mean by that is that you don't have those 3-4 quarters of arrears building up and having to pay them, and even the DCEs cannot do their jobs and they have to come and beg in Accra for their monies to be released to them. You don't have any of that happening. Where things have struggled, or you may say a little bit, is on capital expenditure. That one is 62% compared to 100, and for good reason. You came into government first year, you want to check some of the spending, especially the capex where you have a lot of leakages going in. But going forward this year, there's a commitment to actually spend more through Big Push and those other infrastructure programs. Interest payments were also down by as much as 27%. So it was 83% compared to 100% targets.
Doc,
collectively, what you're seeing is that revenue is almost close to the target, 98%, and those concerns about the revenues not underperforming have proven not to be founded, one. And then on the expenditure side, you've also had a commensurate adjustment as needed, especially with the gains that you're making, especially from the interest, savings.
In 30 seconds, with assurance for Ghanaians in terms of this war situation and what you're doing, in 30 seconds.
I think the government is being proactive. We are not sleeping. And we are building the structures that will allow you to have comfort, the resilience, the supply chain issues, the building, accumulating your gold reserves, and then doing the hard work, really translating all these macro numbers into tangible gains, how you reduce poverty and inequality. That, at the end of the day, is what everyone cares, and with jobs. Dr.
Dusu Sakodie is a senior economics lecturer at the Cons Department at the University of Ghana, Executive Director of CPS. In studio with me is also the President of GUTA as well, and also Dr. Technical Advisor to the Minister of Finance, Dr. Tue Chamford. You don't know what is going through my head right now. And thanks to these distinguished men for joining us in this studio. We've gotten a lot of assurance, so let's see what will happen and how things will play out. This is PM Express Business Edition. Have a great day.